Hi traders, it's Alberto. Today is October the 3rd, 2016. Yesterday's video was on top-down analysis using Fibonacci candles and a few indicators, and today I'm going to show the same strategy using regular candlestick patterns. So let me get started. So the first thing we do is look at a daily chart and determine directional bias by using the 150 moving average line, the crossover on MACD, and candlestick pattern. So right now, obviously the market's in an uptrend looking at the 1 hour, or rather the daily chart, but it is breaking the 50 moving average line. So this is what a retracement typically looks like. You can always determine directional bias, or rather if the market's either reversing or the market's just retracing simply by looking at a daily chart. If price closes and the two lines on the 150 cross the upside, then the downtrend essentially is over. The market is finding strong support and heading north. But right now, we don't see that. What we see is a market retracing. It is breaking the 50 moving average line and the crossover on MACD. So I'm looking to buy the Australian dollar. So I also go over to the 4-hour chart and notice that price is above the central pivot point. It's the other indicator that I also use. And price is starting to find support, and we're heading north. And then I go to the 1-hour chart. Price is above the 150 moving average line on the 1-hour chart. Two lines of MACD are crossing to the upside. So this is essentially a retracement. So I do want to take this trade because on the 1-hour chart we are in an uptrend. On a 4-hour chart we're in an uptrend. And on the daily chart we back to 1 hour, the daily chart, the two lines of MACD have crossed to the upside. So that gives me a go ahead to take this trade based on those three time frame showing that everything is lining up. But I'm making sure that I trade this as a retracement and not a directional bias, because obviously in a daily chart we're not in an uptrend, it's just retracing. But on the 1-hour chart we are in a nice uptrend. So I do take the trade and I start looking for profit at resistance levels. Right now it's breaking Friday's swing high, and I look to exit this trade around 78.08, so that's about 30 pips away from where it is right now. Okay, so that's it. That's essentially what I do. Is just looking at a daily chart, look at the 4-hour chart, look at the 1-hour chart, see if everything lines up. You need several things to happen before you can even think about entering a trade, and that is that all three time frames, if they line up, if you see something on all three time frames that show a direction, then that's a good trade. That trade should work out. Then you need to look at where the market most likely is going to stop. And right now, the swing high, that's 78.08, is most likely the area that the market will stop and react to that level, because we are still in a downtrend on a daily chart. Okay. So let's look at some other pairs and see if we can find some setup. Okay, we're looking at the CAD yen, Canadian yen pair, and we're looking at a daily chart. So we are in a downtrend, but we do see two lines of MACD crossing to the upside. So I'm looking for a retracement trade. Again, the market's in a downtrend, so I don't look for trades on a Monday right now. I'm not looking for a directional bias trade simply because the two lines of MACD on a daily chart crossing to the upside, so that means the market's retracing. The overall direction of Canadian yen is to the downside, but I'm looking for any retracement trade that I can take and exit for maybe 40 or 50 pips. So that's the daily chart. I've got my first sign. Okay. I go to the 4-hour chart and notice that price is above the 50 and 100 moving average line, and the two lines of MACD across the upside. Okay, so the daily and the 4-hour chart are giving me signs that this is going to be a retracement, and price is above the central pivot point, so that helps a great deal. We go to the 1-hour chart, price is above the 150 moving average line, it's above the central pivot point. The two lines of MACD are braided, but it's above the 0 line. So we have 3 reasons why price most likely is going to retrace and continue at least up to the previous high, which is Thursday. Here's Thursday's high, 77.80 area. So if I'll take a trade, but I make sure I exit on the next swing point, the next resistance level, simply because this is a retracement trade. Remember, when we were looking at the daily chart, the two lines, the 150 moving average line, are slanted to the downside. That indicates the market is still in a downtrend. But we're starting to see the market find support, and we also see there's a possible divergence set up on a daily chart. Okay. The other thing that I forgot to point out here are swing points on Canadian yen that are lower, but let me just look so we can look back. Let me just make it smaller. Here are the swing points and wave patterns on the Canadian yen. So it looks like the beginning of divergence, but it's not qualified yet on a weekly chart. So we cannot take this trade based on divergence yet. We need for more confirmation. But right now we have price above the central pivot point, above the 150 moving average line, and MACD is above the 0 line. So this is an indication that price, for today at least, should rally, okay, up to the 77.80 area. Here we're looking at the Australian dollar, and again, using our top-down analysis, notice that MACD is angle is separated going up above the 0 line. Price is above the 150 moving average line on a daily chart. So we're in an uptrend, but we have to be careful because we have a strong resistance level up at these 77 level. Okay. I'll scroll down to the 4-hour chart, and price is above the central pivot point, above the 150 moving average line. So for today, we're looking to buy Aussie dollar. And scroll to the 1-hour chart, and this what we're looking for. We're looking for something that all 3 time frames agree upon. They all agree that the market's in an uptrend for at least today. So we have MACD crossing the 0 line. We have price above the 150 moving average line. Even though they're braided, notice that price, the bodies of the candles, are above this, and it's above the central pivot point. So the daily, the 4-hour, and the 1-hour chart all agree that the market is in an uptrend. But we have to be careful. We do take this trade, but we know that that 77.30 area is a strong resistance level, and market most likely, that's about 25-30 pips away, most likely will challenge that area of resistance. So that's it for this tutorial. If you have any questions, just go to our website. Here it is, fx-northwest.com. We offer several products, trade signals, private coaching sessions, and videos just like the one you just watched. Have a good trading week. Thanks for watching the video.